How's it going, guys? Stas here. Welcome back to another video. Happy Friday, by the way. I appreciate you all for tuning in as we're about to break down Sofi, which is down over 1% as the indexes, well, are a mixed bag again. Well, mostly green, but we do have the Russell in the red, so we're going to break down not only Sofi, but the indexes as well, maybe some other stocks later in the video. But first, of course, hit the like button. Feel free to subscribe. Join the email stock newsletter. It's free. And if you guys want to be a part of the Patreon, see me build my portfolio, which I just posted an update earlier today. That's linked down below as well. And now, cheers. I appreciate you guys for tuning in again. Let's dive into it. So SoFi is trading at $21.25. So that $21.50 to $22 level is still acting as resistance, right? We're down over 1.1% right now. And essentially, man, we've been downtrending the entire day, right? You can see clearly lower lows, lower highs have been made on the intraday chart. And this is as the Dow's up about 0.25%, S&P 0.35, same with the NASDAQ. So we're up a decent amount on the Qs, S&P, Dow. The Russell is down a little bit, barely 0.05% in the red, so really not much at all. But yeah, we're seeing a decent green day here on this beautiful Friday. But SoFi's down over 1%, and the Head and Shoulders that we've been talking about, well, is intact. It's intact still, guys. We're going to take a look at that here in a second. But first, let me show you this. On the 5-day, 5-minute now, we are back under both moving averages. We have a death cross. We're taking out the lows from yesterday, although we are still above the lows from 2 days ago, Wednesday, which is good, and from Tuesday. So it's not like we're completely collapsing, but we are seeing the bears gaining momentum right now. Again, death cross, 5-day, 5-minute, and we're taking out the lows from yesterday. Keep that in mind. And on this 30-minute chart, let's pull this up. Now you guys are starting to see the Head and Shoulders, which we called out, I think, like 3 days ago. I noticed the start of it, the formation starting. Now fast forward a couple days, it's really starting to play out. So you're noticing on this 30-minute here, clearly the last couple of days, pretty much all week, we've struggled to break $22, really $21.50 to $22, and that's still a big resistance today. And on this 30-minute, we're now dumping under both moving averages, which we were above them yesterday. And on Wednesday, we were under them. Same with Monday, Tuesday. So now we're getting back under them to end off the week, right? Not the best sign overall for the Bulls heading into earnings. But to be honest, man, I'm looking at this like, all right, we're down now about $1.50 from highs. Not much, to be honest, not much, but hey, 7%, 6-7%. We have seen a little pullback, right? Heading into earnings. What if earnings are super strong? You know what I mean? This could easily start to rebound and rip, considering, okay, the RSI's come down a little bit. We've seen a little sell-off. Not much. Again, 6-7% is not much. But yeah, it's all going to come down to earnings, guys. And on the flip side there, if earnings are not that great, guidance is off a little bit, man, maybe this Head and Shoulders really starts to play out. We see more downside. And if I pull up this 1-hour chart, you guys can see it, If I get some lines drawn out here, we can see big support coming up. It's 1975. That's where we hit back in the early days of July. Also, just a couple days ago, earlier this week, on the 22nd of July, we hit 1975. So clearly, that's a big support. So if this Head and Shoulder starts to play out, I would think that's the first target to watch for. Then if that were to break, guys, 1975, yeah, that's where things could start collapsing even further, maybe down to 1825 ish, 1830 range. That's where the stock was on the 7th of July. And if I pull up this 4-hour chart and zoom in a little bit, you can see some key levels coming up. So that 1825 level, that's also right by the 180 SMA on this 4-hour chart. So yeah, keep your eyes on it, man. I'm telling you, Head and Shoulders, we saw it coming a couple days ago. Now it's really starting to form, but it's going to come down to earnings. That's what it's going to come down to. And if their guidance is bad, again, if earnings are right, we might see that slip. But again, if they're a grand slam, we might get a pop over 22. That's why my alert is set at $22, guys. And earnings are not Monday, but they're on Tuesday. So we still have Monday to go. It's going to be an interesting day, to say the least. So make sure to subscribe, because we're going to do more videos on Sofi, not just Sofi, but a bunch of other stocks. We're going to break down the market a bunch. That's what we do here, guys. So make sure to subscribe if you enjoy this type of content. And yeah, that's what we're looking at. It's down 1%. Stocks in general are moving up. The S&P right now, if I pull it up, is up around 0.25%. We're pushing all-time highs again here, guys, which I think we're like 20 cents off. Yeah, we hit all-time highs, it looks like, in the overnight market. Now we're pushing for that again. You can see that on the 5-day, 5-minute. Here on the 20-day chart, man, stocks have just been moving, guys. They've just been going, man. This is a crazy recovery. It's like, did early April even happen? Do you guys remember the panic around tariffs? Oh my God, the world's over. World War III. That was just a blip. It's crazy how this goes, man. And, the longer you're in the stock market, the more you see the same thing happen over and over again, but just different. It's different catalysts, right? So one time was COVID. Then you have this. Then in 2018, right? You guys remember around Christmas time, we had a huge crash. It's like it's always something, right? But it always ends up being, resolved. It seems like, right? The stock market always comes back, right? It's done it in history so many times. So that's why I'm a huge advocate when we see the market take a dip like this. We went from 612 to 480 in 2 months, a 22% drop on SPY. When I see that, guys, again, I've seen it time and time again. I'm all over it. I'm buying individual stocks. I'm buying ETFs. And, man, it has not failed me. Look at this. Now we're back to 636, all-time highs. QQQ is up way more than SPY off the lows. QQQ's up like, 43% off the lows. So think about how many stocks have gone up 2-3x off the lows, 50 to 75% off the lows. A lot of them, if the Nasdaq's up 40%. So, yeah, stocks are on fire. And with that being said, guys, if you're in some short-term trades, right, if you're swing trading, if you're doing whatever you're doing, maybe now is a good idea to maybe take some profits. I'm not telling you to take all your profits. Do what you want to do. Not financial advice. But usually when stocks are, up 40% off the lows, and we're talking indexes here, the index, the NASDAQ 100, is up 42% off the lows. It might not be a bad idea to trim a little bit. I'm not telling you what to sell. Do whatever. Do what you want to do. And look at the VIX. Another reason. The VIX is now at an extreme low point. 14, it's almost in the 14s, guys. The VIX is at 15 right now. And it's down, I think, 2% on the day. So I'm not telling you to go sell your whole portfolio. That's not what I'm saying. I'm holding a ton of stocks, guys. But I'm saying if you're in short-term trades, swing trades, stocks you bought in April that you wanted to flip for a quick little profit, if you're still in those, you want to get out, now might not be a bad time, honestly. And we could go up a lot more in the short term. But just keep in mind where we're at. We're hitting all-time highs. Stocks are pretty overbought. The indexes, in terms of the RSI, the VIX is at a multi-month low, and it seems like here every time the VIX since December has gotten down to the 1450 to 15 range, it's spiked, right? So considering all these factors, it might not be a bad idea to trim a little bit. And, that's kind of where I'm at on some of my trades. I'm like, or even some of my long-term positions that I've held now for a couple years, right? I'm like, maybe now's not a bad idea to trim a little bit. It doesn't necessarily have to be a short-term trade. I don't know why I said that, because you could trim your long-term positions as well. It's not a bad idea. It's actually smart to rebalance, because when your portfolio is growing, let's say you bought a bunch of, NVIDIA or Palantir or whatever, or Sofi. Let's say you bought a couple of these stocks and they've grown massively over the last 4 months, and now they're extremely overweight in your portfolio. Some people might be scared to, sell, like, oh, I'm not supposed to sell ever, right? That's kind of a myth. It's a good idea if you're overweight on a stock, especially if it's an individual stock. It's a good idea to trim a little bit. So you might want to do that. I don't know. Do what you want to do. But yeah, it kind of makes sense if something's overweight. If you're up a lot in a short amount of time, take some profits, man. Rebalance, add some underweight stocks, whatever you want to do. But yeah, I don't want to ramble too long, guys. That's it. If you enjoyed the video, smash the like button, subscribe, join the email stock newsletter. It's free. And check out the Patreon for my portfolio updates. All the links are down below. And with that being said, I'll catch you all in the next video.